And oil prices, of course, rose more than 1% today, pushed up by tensions in the Middle East, where top crude exporter Saudi Arabia and other Arab states cut off ties with Qatar, and as signs of falling OPEC supplies tightened the market. Saudi Arabia, as well as the United Arab Emirates, Egypt and Bahrain, cut ties with top liquefied natural gas and condensate shipper Qatar, that's today, accusing it of supporting extremism and undermining regional stability. Brent crude futures rose 70 cents to $50.65 per barrel. U.S. West Texas Intermediate futures were at $48.34 a barrel, up 68 cents. Investors continue to doubt the ability of OPEC to rebalance the oil market, with crude oil prices remaining under pressure amid further signs of rising U.S. oil production. In the meantime, here in Nigeria, oil exports this month is expected to hit a 15-month high as one of its main export terminals, Forcados, is set to resume output in the Niger Delta. The Forcados oil terminal was lost in February 2016 to vandalism by militants in the oil region, while several attempts to restore the facility proved abortive. Last week, reports say Nigeria and Libya were responsible for higher output of crude among members of the Organization of Petroleum Exporting Countries. Both producers are exempted from the current OPEC and non-OPEC cutback, the deal hammered out last November. Nigeria's oil output was trimmed last year on repeated attacks against major oil exports by militants, but which has since abated on new partnerships pushed by the federal government with the oil communities. And in South Sudan, that country is producing around 130,000 barrels of oil a day and wants to increase its refinery capacity to supply fuel to neighboring countries. Now, the petroleum minister says the country is focusing on 4 or 5 refineries so it can finally be able to sell to Ethiopia, Sudan, Kenya and Uganda. East Africa's mainly mature oil producer, South Sudan, is aiming to double oil output to 290,000 barrels per day in 2017 and 2018. Now let's look at other markets here in Nigeria, talking about the fixed income and, of course, the currency market. Investors were upbeat in the secondary market of the Treasury bill last week, with demand across all segments of the curve. Overall, average yield contracted by 54 basis points to 18.48%. And investors were also upbeat in the bond market, with average yield declining by 22 basis points to 16.66%. Well, let's get a sense of how the fixed income market and the FX market are starting off the new week. I'm being joined by a dealer with Axis Bank, Femi Akinyemi. Good afternoon, Femi. Thank you very much for joining us.
Good afternoon. Thanks for having me.
Now, it's a new trading week. What's the sentiment like in the fixed income market?
Well, it's been a slow start to the week. The fixed income market activity has been very minimal. For Treasury bills, it's been slightly bearish. We've seen rates move up by an average of 10-15 basis points from where they opened. While in the bonds market, it's been relatively flat. Not so much has been done. Turnover, as I speak, is less than $1 billion. For the FX market, what we've seen is CBNs continue their intervention. Today, they floated another 100 million wholesale auction. So we're yet to get the result of that. But in general, it's been a very slow start to the week.
Now, let's still talk about the FX market. What is the outlook like for that market, rather the fixed income markets?
Okay. Do you mean the fixed income or the FX market?
The fixed income markets.
Okay, for the fixed income market, we expect that activity should pick up with maturity of about 75 billion on Thursday. However, with CBN continual OMO auctions and then also the FX auctions, that has also crippled trading in the market because most banks would rather fund for their FX bid. So we don't really see much happening in the fixed income. And also we expect that rates will be around this level, probably even be bearish if CBN conducts more than one FX auction this week.
Now, how do you see participation in the fixed income market this week, being affected, considering the fact that there's a bullish run at the equities market and a lot of investors will, of course, like to cash into the equities market?
Well, like you said, there's been so much activity in the stock market, and that has largely been influenced by the I&E window that was recently created. So that served like a platform where investors can come in at a comfortable level. But we've not seen that effect spilled into the fixed income market yet. We expect that sooner than later that will happen. And also, if CBN reduces their OMO auctions, we might see a bit of activity in the fixed income market. We expect that sooner or later, the internationals will come back to the fixed income market, particularly the bond market, where the yields are relatively attractive. Most of the bonds are trading at a discount. So sooner or later, we might see some buying in the fixed income market by the investors too.
All right,
international investors, I mean.
Okay, just before I let you go, at what rate are we likely to see the Naira close at the end of trading today? Okay,
for the interbank market, I mean, the CBN interbank market, we expect that rates will still remain stable at around 305 levels, probably 305.40. For the parallel market, we've seen continual appreciation in rates in the last 2 or 3 weeks. It's currently around 372, 370 levels. We expect that we'll continue to see appreciation in that. However, the I&E window has been stable around 380 levels. That might still be the same for the rest of the week.
All right, thank you very much for your time, Femi, and do have a wonderful day. Enjoy the rest of the day, of course. Right, that was Femi Akinyemi, dealer with Access Bank.